Hello guys, Eman from PH here and welcome to another episode. Also shout out to the podcast listeners as well, I appreciate y'all. Our topic for today is Peso-cost averaging. So let's get started. So first, we're gonna look at the origin of Peso-cost averaging. Actually, it was derived from this DCA, dollar cost averaging. I'm not sure who the proponent is, but it originated in the US because yeah, dollar is their currency. So dollar cost averaging refers to the practice of dividing an investment of an equity up into multiple smaller investments of equal amounts spaced out over regular intervals. Then the goal of dollar cost averaging is to reduce the overall impact of volatility on the price of the target asset, as the price will likely vary each time one of the periodic investments is made. So the investment is not as highly subject to volatility. So yeah, this strategy is for like low moderate risk takers when it comes to investments. Then this strategy aims to avoid making the mistake of making one lump sum investment that is poorly timed with regard to asset pricing. Basically, you don't care about the price of, for example, the stock that you're gonna buy. You don't care about that. You're just gonna buy it regularly on a set amount of time. And it's an attractive option for investors who want to contribute to their investment portfolios on a regular basis, as I've said earlier. And then it eliminates the issue of market timing. And I'm gonna leave the sources down in the description. So this one, it came from Investopedia and Investing Answers. So if you're interested, just check it out down there. So now let's move on to Peso-cost averaging. So what is Peso-cost averaging? So before you can use this strategy, you need to determine some things. So the first one is the frequency of your purchase. So do you want to invest weekly? Do you want to invest monthly? Bi-monthly? So that's either every 2 weeks or every 2 months, but in this case we're going to use bi-monthly as every 2 months, quarterly, or yearly. Well, yearly is not really ideal because yeah, I mean it's not really for Peso-cost averaging because that's not really a regular investment. If you're gonna invest, if you're gonna put in money every year, I mean, yeah, it's quote unquote regular, but yearly is, 1 year interval is quite a lot of time. Quarterly is not ideal as well. So your best bet here is bi-monthly or monthly, because I think weekly is just too aggressive. Then number 2 is the date of your purchase. So like the common practice would be monthly because that's when your salary comes in. So you can say every first of the month, so that when you have like your full salary on at the end of each month, you can put it in your investment portfolio on the first of every month. So that's a good starting point. And then number 3, of course, you need to determine the amount that you will invest. And that needs to be a set amount as well, so that you can really take advantage of this strategy. So first, you can pull it out of your savings. So for example, it's a big amount, then you can divide it into equal parts. So let's say you have, so it's not that hard to divide 120,000 pesos. You're gonna divide it and invest it every month, so that's 10k per month. Very easy, right? And then you can also do it every month. So as I've said earlier, whenever you get your salary, you just put in, you know, a certain amount of money every month, so that your portfolio will grow. And number 4, you can't really invest if you don't have a stockbroker, so you need to settle that first. And then lastly is choosing your stock. So your first option is just to buy one stock. So for an investment of 1,000 pesos or less per purchase, so that's the ideal one, because you know, if you have like 1,000 pesos in savings and you want to invest it and use peso cost averaging, you're better off just getting one stock instead of like multiple ones. And then if you have like a budget of 5k to 25k, could probably fit in like 3 to 5 stocks with that kind of amount of money. But that's really up to you. You can also just buy one if that's your thing. These are just my opinion and my recommendations, so it's up to you if you're gonna follow it. And if your budget is like 50k and up, you can buy 5 stocks or more. It really depends on your preference. Then here is an example of a peso cost averaging table. So I just wanted to clarify here, PLC is Premium Leisure Corporation. That is a stock that is enlisted in the PSE, Philippine Stock Exchange. And here you have 12 rows, and each month, each row represents each month that you're gonna invest. Then every month you're gonna put in 10,000, and as you can see here, the total is 120k. That's for 1 year, so that's for 12 months. And then you have one row here on the third row, price per share. So that's the difference that peso cost averaging is making. You're gonna buy the stock every month, every first of the month, even if it's high, even if it's low. So as you can see here, the first purchase is 2 pesos and 13 centavos, second month 2, and then third month 1.4, and then it plummeted. It just really went down on the fourth month. It became 64 centavos per share. So you get the idea. So the ending is, even though you bought like, you know, 2.13 pesos per share at that time, and then here 1.4, and then 2 pesos on the second month, at the end of 1 year, after consistently buying PLC with, you know, 10,000 pesos at hand, 10,000 pesos budget, the average price after 1 year is just 1 pesos and 7 centavos, and you're gonna end up with 140k shares of PLC. So there we go, 10k monthly investments, then 120k total investment. Average cost per share 1.07. I already said those things, I just forgot to click on the slides, I'm sorry. And then, for example, say you saved 120k in 1 year and you didn't invest it right away and you didn't use peso cost averaging. Then you bought PLC stocks at 2 pesos per share. You'll only get 60k shares compared to 140 if you apply peso cost averaging for 1 year. The upside is if you timed it perfectly and you bought at a cheaper price per share. Yeah, because if you have 120k and then you just bought like on the 12th month, it's gonna be just 0.57 per share. But because on this second example, I just randomly put in the 2 pesos, so that's like the second month, it's 2 pesos per share. So you know, you got beaten out by the peso cost averaging strategy. And yeah, that doesn't always happen, and you really don't know when is the best time to buy something. And then here are the pros and cons of this particular strategy. So the advantages are, first, it eliminates the anxiety of buying at the right time, because you're regularly investing and you're just gonna buy whatever the price is on that particular day. You won't be, anxious about like getting the right price, or it's just a bargain. And then number two is you can start with a small amount. So as I've said earlier, you can just put in 1K every month and buy whichever stock you want on the price given on that trading day. And yeah, you're basically investing. Then number three is the risks are minimal. Number four, it is a good way to start investing your money on a regular basis. So if you really don't have any background with investing and you haven't really studied it yet, that's a good starting point. And then yeah, as I've said earlier, it's a good starting point and it's very beginner friendly. But of course, there are also disadvantages. First is your investing habits is comparable to a machine or a robot. So actually you can automate it, I think, in Call Financial. I'm not sure, but in BPI Trade, I don't think that's possible. But yeah, since you're just purchasing the stock every single month with whatever price it's listed at, so you're just basically a robot. Then number two, you won't be able to use much of your better judgment, because maybe on the second day of the month it's much cheaper, but you're buying at the first day, or maybe on the last day of last month you received your salary, but you're scheduled to buy on the first month on the next day. And for example, the price yesterday was 0.50 and then it jumped up to 0.80 today, which is the time that you're gonna buy. So you won't be able to do that. But of course, I mean, if you're not gonna strictly follow Peso-cost averaging, you can avoid those things. But like in theory, if you're just gonna follow strictly Peso-cost averaging, you won't be able to do that. And you're giving up control. That is number three. Number four, you might miss out on good investment opportunities, because you're already set out to buy this stock, or maybe 2 stocks, or maybe 3 stocks every single month. So for example, there might be an IPO, right? So you're gonna miss out on that unless you have like more money coming in. So that's a different conversation. And number five, you're not really expanding your portfolio that much, because you're just buying limited stocks. Unless you have like 100K to spare every month, then you can buy like whatever stock that you want. Alright, so here are some articles or websites rather, that can really help you. So this one is from BDO Nomura. There's a link down in the description, and then here is Film Asset Management. These links will route you to the Peso-cost averaging section of their websites, and you can read up on that and you can get started. Alright, so that is the end of this episode. Don't forget to like the video if you want more videos like this. And to the podcast listeners, thank you very much for listening. Don't forget to subscribe to my channel as well and ring the notification bell so you won't miss any of my uploads. Again, I come up with new episodes every Tuesday and Thursday. So let's end with a quote from Warren Buffett. So he said that in the business world, the rearview mirror is always clearer than the windshield. Okay, thanks for watching, and I hope that you learned something from this one. I'll see you guys in the next one. Bye for now, and remember, be Peso smart.